Hello friends, welcome to Bankers Platform. So friends, today in this video we will be discussing the most expected questions, and these questions will be important for certificate course in foreign exchange operation and international trade finance. So like exam will be happening on 28th June. So for 28th June, some of the most expected questions we have made, and it will help you, and a lot of chances are there that these questions can be asked in the exam. So let's start with the first question. Which one of the following is a feature of trade finance? So our options are self-paying, self-liquidating, self-drawing, self-monitoring. So let's see what is the correct answer. Correct answer is B, that is self-liquidating. So all the trade finance, whatever the banks are giving the trade finance, so that is self liquidating. So what is self liquidating? Self liquidating means business is one where the initial investment is repaid from the revenue generated by the business itself, often within a short period. This means the business does not need external funding sources to cover the initial cost of operation or asset. In simpler terms, the business pay for itself through its own earning. So what is happening in trade finance? Suppose somebody is doing some export, okay, and that export is of $10,000. $10,000. So if bank is giving 90% amount as a finance, trade finance. So when this export payment will be coming, so it will be self-liquidating. Automatically, it will liquidate the whatever the credit is given. So trade finance is called self-liquidating. Let's see next question. Which of the following can be example of supplier credit for an export transaction? First, LC providing for drafts drawn at site, collection bill payable 90 days from date of invoice, UPAS LC payable at 90 days, collection bill payable on DP basis. So let's see what is the correct answer. Correct answer is B. That is collection bill payable 90 days from date of invoice. So this is the example of supplier credit. So question number three, which document is not required for availing packing credit within sanction limit? Our options are copy of confirm export order, original LC for endorsement, copy of bill of lading, request letter with order details. So यहाँ पे फ्रेंड्स आपको बताना है कि पैकिंग क्रेडिट, फॉर पैकिंग क्रेडिट which document is not required. So let's see the correct answer. Correct answer is third, that is C. That is copy of bill of lading. So bill of lading, when it will be generated, bill of lading will generate when the person will ship the goods. Okay, when he will be doing the shipment. So after shipment, bill of lading will be generated. But here the question is for availing packing credit. Packing credit facility means pre-shipment. Okay, packing credit means pre-shipment requirement of the customer. So for that, the bank will be asking the copy of confirm export order, original LC. If LC is there, original LC should be there, request letter with order details. So these three things will be required for giving the packing credit loan. That is pre-shipment credit also you can say, but bill of lading is not required. So when bill of lading will be required? When you're giving the post-shipment. When you're giving the post-shipment credit. What is post-shipment credit? Post-shipment credit is bill discounting. Okay. Bill discounting, negotiation of the bill. Okay, so when you're doing bill discounting and negotiable of the bill of like under LC, so in that case you will be asking the copy of bill of lading, also copy of shipping bill. Okay, shipping bill copy will also be required. So I hope so you understood. This is very important. From here, question can be asked, and definitely you can get 1 to 2 marks question from this area. Which document is required? So they will not ask you very deep documents. They will be asking some general documents which are common. Let's see next question. Question number 4. If a commodity is priced on CIF terms, packing credit is generally released on which price? So Again, so commodities prices shift term. So on which price the packing credit will be given? CIF, CNF, CNI, and FOB. So let's see what is the correct answer. Correct answer is fourth. That is FOB value. So FOB is free on board. So free on board value is that which is excluding insurance and freight. So whenever you will see a shipping bill, so in shipping bill, FOB value will be given. So FOB value is the real value of the goods. Okay, real value of the goods. So additional to that, insurance and freight. So these will be separately added. So suppose shipping bill is of 20,000. Okay. Shipping bill is of 20,000. So in that you will see that FOB value. FOB value they would have given like FOB value is 19,200. Okay. Insurance will be $300 and freight will be $500. So like this it will be there and total is 20,000. So in this way it will be mentioned. So this is the FOB value. Okay. And FOB value will be separately mentioned on the shipping bill. Below it will be mentioned that this is the insurance value and this is the freight value. So in this way, you can answer this question that whenever bank is giving packing credit facility, so bank will see what is the FOB value of the goods. Based on this FOB value only, bank will be giving the finance. They will not finance for insurance and freight that customer has to bear from his own. So this is some things what is CIF and FOB. So free on board and CIF. So this is a company. Okay, here is the company and he is a shopper who wants to purchase. So if he is the seller is responsible for cost liability until buyer receive the goods. Which cost? That cost, insurance and freight. So all will be the seller. So he is the seller. This person is seller. So if it is free on board, so the buyer, not the seller, is responsible for the cost liabilities once goods are shipped. So this company will just ship the goods, and after that, all the risk will be with the buyer. Okay, shopper it is written. This is the buyer, and this is the seller. Okay, so this you can remember for CIF and FOB. So Incoterms are very important. So all the Incoterms you have to remember and what it tells about. And if you remember Incoterms, you can get 2 to 4 marks in the exam very easily. You can score. So just go through all the Incoterms we have already discussed in our previous videos, how Incoterms are working and what are the benefits and all. So you can also go and study that. Let's see next question. For a US denominated order, PCFC cannot be availed in Euro, Indian rupee, Japanese yen, US dollar. So let's see what is the correct answer. Correct answer is Indian rupees. So already here it is mentioned PCFC, packing credit foreign currency. So already it is written it should be in foreign currency and we are already in India and our home currency is INR. So this credit will not be given in INR. It can be given in Euro, USD, Yen, whatever the currency is mentioned on the invoice. But the loan will not be given in INR. So for INR, it will be PCINR. PCINR will be there. That in that case, the bank will be giving the PC in Indian rupees. So next question number 6, which function is mandatory in factoring? So factoring, forfeiting, this is also very important topic. So setting buyer credit limit, sending payment reminder, financing the seller prepayment, and arranging credit insurance. So which is the mandatory function of factoring that you have to tell, and that will be your answer. Let's see the correct answer. Correct answer is C, financing the seller prepayment. So this is the mandatory function of factoring. So factors are usually members of which global organization? FEDAI, FCI, ICC, WTO. Let's see correct answer. Correct answer is B, that is FCI. So FCI, which was called Factor Chain International. in the past, provides service for 383 member factors in 94 country, and FCI define legal common rule which is called GRIF, General Rules for International Factoring, and provide an EDI system for credit application, answers, and for transfer or settlement of invoices. So these factors will be the member of FCI, Factors Chain International. So friends, don't forget to subscribe the channel. So many of you are coming on our channel, watching video, getting some benefit. And if you're benefited from channel, just hit the subscribe button. That will be a type of support to our channel. So I hope so you all will be hitting the subscribe button and also the like button. So let's see this question number 8. In domestic LC discounting, who cannot be a party? Buyer from Singapore, supplier bank in India, supplier from Chennai, Indian buyer procuring for export. So for LC discounting, domestic LC, who cannot be party? Let's see the correct answer. That is buyer from Singapore. Answer was already revealed, no issue. But you have to understand the concept. That here it is talking about domestic LC discounting. And there are two LC. One is domestic, one is foreign LC, FLC. That will be called FLC. And other is domestic LC, or some banks will be telling inland LC. Okay. So in that LC, foreign party should not be there. Okay. Supplier bank in India will be there. Supplier from Chennai, it can be there. Indian buyer procuring for export, this can also be there. But foreign person can't be there. So first will be the answer. Let's see next question. Subscription we have already discussed. So next is a bid bond guarantee is required before submitting a tender bid, after winning a bid, before good supply, after good supply. So let's see the correct answer. Correct answer is A. Before submitting a tender bid. So whenever somebody is submitting a tender bid, in that bid bond guarantee is required. So first is the correct answer. Let's see next question, question number 10. A shipping guarantee facilitates A. Exporter to ship without bill of lading, bank to release goods without payment, buyer to get goods without original BOL, bill of lading, bank to get payment without buyer's payment. So what is the shipping guarantee facilitates? Let's see the right answer. Correct answer is C. Buyer to get goods without original bill of lading. So if it is shipping guarantee is there, so that means the buyer will get the goods without original bill of lading also. Let's see next question. Which is a regulator for India's international trade? IRDAI, DGFT, PERDA, as SABI. Let's see the correct answer. Correct answer is B, DGFT. Let's see next question. HS code was developed by. So who developed the HS code? WTO, DGFT, World Custom Organization, Indian Customs. Let's see the correct answer. Correct answer is C. That is World Custom Organization. So World Custom Organization, made, they have developed the HS code. So HS code is very important whenever you are making any import in India. So that HS code to be entered in the shipping bill. Whether you're doing import or export, HS code to be mentioned on the shipping bill and bill of entry. So HS code is a harmonized system code, is a globally standardized system for classifying traded products. So it's a type of code that is given to various products. Okay. So it is used by custom authority worldwide to identify and categorize goods for the purpose like custom clearance, tariff calculation, trade statistic. The HS code system is maintained by World Custom Organization and is essential for facilitating international trade. Okay, so let's see next. This is HS code example. So here you can see HS code for Apple. That is this one. 0808100. So international and national. So first 6 digit. give the information about the international place, and national local place it will give next six digit. So like section 2. So section 2 is vegetable product. So here it is written 8. 8 means edible fruit and nuts, peel of citrus or melon. Again, 8 means heading 8 means apple, pears, quinces, fresh. Subheading is 10 for apple. And country specification. Suppose any country is there, like India is there, so Indian code will be mentioned, or district or place of origin that can be identified by using this data. So HS code is very important for import and export. So before moving further, I would like to tell you, friends, we are having a certificate course in foreign exchange and mock test series also in foreign exchange operation. So if you want to go for this exam, so you can go for this course. It will help you in clearing the exam in certificate in foreign exchange. Here we are having the study material, okay, mock test and videos on the important topics. So these all, if you're covering, then you will be able to clear the exam. Suppose you are having the study material with you, okay, you are already having the book, you know the things, but you need mock test series for practice. So this is a separate mock test series and this is a full course. So if you want to purchase, you can purchase from our app, and app link is available in the description box. We are also having a website. From there also you can purchase that. That link is also available in the description box. Other than this certificate course in foreign exchange operation, we are having the certificate course in international trade finance, same full course and mock test series. So if you are willing to purchase, you can just visit our app by downloading through the Play Store, and you can also visit our website. So this is was a short information and a good discount right now going on. 40 to 50% discount is going on in our courses. So if you are willing to purchase, that you can purchase, and soon these discounts will be removed also. So if you want to purchase, you can purchase as soon as possible. And exam is also approaching, and 1 week time is there to prepare. So let's see next question. FEMA 1999 empowers which regulator to direct authorized person? DGFT, RBI, Indian Custom, FEDAI. Let's see the right answer. Correct answer is B, RBI. So FEMA 1999 gives the power to RBI to direct authorized person, means authorized dealer, AD banks. Okay. Let's see next question. Third party export must be declared on bill of exchange, shipping bill, export journal manifest, bill of entry. Let's see the correct answer. Correct answer is B, shipping bill. So whenever third party export is happening, so that should be mentioned in the shipping bill document. Then only it will be valid. So here, if the question is third party imports, okay. If question is third party import, then the answer will be bill of entry. So जब भी हम export करते हैं, whenever we are doing export, shipping bill is generated. Whenever we are doing import, then bill of entry. Import means हम बाहर से अपने कंट्री में गुड्स ला रहे हैं, और जब भी बाहर से कोई कंट्री में गुड्स आ रही है तो उसकी क्या हो रही है, एंट्री. सो वी विल रिक्वायर बिल ऑफ एंट्री. एंड व्हेनेवर वी आर डूइंग एक्सपोर्ट, एक्सपोर्ट जब भी हम कर रहे हैं तो हम क्या कर रहे हैं, जो सामान है उसे बाहर भेज रहे हैं, दैट इज वी आर शिपिंग. सो वी नीड शिपिंग बिल इन इन export. Okay, so for export you need shipping bill, for import you need bill of entry. Okay, and if any third party is involved, that should be mentioned in shipping bill and bill of entry as per the requirements. So let's see next question. Which is not a method of financing export receivable? LC bill negotiation, vendor financing, export bill purchase, factoring. Let's see the correct answer. Correct answer is B, vendor financing. So this is not a method to finance. Other methods are used: LC bill negotiation, export bill purchase, and factoring. Which is not a country risk? Import ban by buyer's country, forex shortage in buyer's country, buyer delaying payment due to currency devaluation, embargoes on exporters country. So let's see what is the right answer. Correct answer is C, buyer delaying payment due to currency devaluation. So this will be called as a country risk. So credit risk can be mitigated by how we can mitigate the credit risk. 100% advance payment, buyer exposure limits, credit insurance for usance bill, all of the above. So let's see the correct answer. Correct answer is all of the above. So for the mitigation of credit risk, we should ask 100% advance payment and we should have a buyer exposure limit. Suppose single buyer is there, like in banks, we are having a individual buyer limit, like groups concern are there, so they cannot, bank cannot lend more than a particular amount. Suppose 100 crore is fixed, so more than that, bank will not lend. In the same way, for credit risk mitigation, the exporter exporter can get 100% advance payment. He can have a buyer exposure limit. So whosoever is buyer, they can tell that we will not make the exposure limit more than 50 crore to the single buyer. Okay, so then they can mitigate. Credit insurance for usance. If usance bill is there, okay, usance bill means when you are doing payment after 30 days, okay, other than site. Site means as documents received, payment has to be done. Other than site, that will be called usance bill. In that 30 days, 60 days, 90 days time period will be given, and after that only the uh, payment will be done. So for that type of bills, the exporter should take credit insurance, like our ECGC is there. So that insurance should be taken. Okay. So all of the above is the correct answer for this. So next is which tool does not hedge forex risk for an exporter invoicing in euro? Forward contract, parking funds in local currency, parking funds in euro, future contract. So you have to tell which tool does not hedge forex risk. So correct answer is 1 second. So correct answer will be B only. That parking funds in local currency. So if you are parking the funds in local currency, that is not going to hedge your forex risk. If you are having forward contract, that will hedge your forex risk. Okay, if you are parking funds in euro, okay. So if you are parking funds in euro, that will also help in hedging the forex risk and future contracts. So let's move to next question. So next question is related to letter of credit. So here is one case study type question. Okay. So you will be getting so many questions from the letter of credit. Okay. LC. From LC, you will be getting case study questions and it can give you up to 10 marks in the exam if you prepare well, if you have a understanding of letter of credit, how the dealing is done. Okay. So let's see here also we'll have the questions which will help you. So an Indian import company Indotech Private Limited agreed to purchase machinery from Chinese exporter. Okay. And Chinese exporter is Sino Equip Company. And the value is 50,000. For ensuring payment, he is asking LC. Okay. And that is also irrevocable from its bank, that is SBI, in favor of Sino Equip with Bank of China as advising and negotiating bank. So shipment terms are FOB Shanghai and payment is against submission of document, bill of lading, commercial invoice and certificate of origin. So this is a basic format of a foreign LC dealing that you should remember. Okay, now let's move to question. Who is the applicant in the letter of credit? So you have to tell who is the applicant. Sino Equip, Indotech, State Bank of India, Bank of China. So friends, just you understand the concept and then only give the answer. Don't give the answer in hurry because your concept will not be clear. And if you're having any doubt related to this, you can just ask in the comment section. We are here to reply to your all queries. So let's see what is the correct answer in this. Okay, so correct answer is B, Indotech Private Limited. So Indotech Private Limited will be applicant. Let's see next question. Which bank is responsible for issuing the LC? So which bank? Simple. Bank of China, People Bank of China, State Bank, Reserve Bank. And the correct answer is C, State Bank of India. So that will be responsible for issuing the LC. Next is, what is the role of Bank of China in this transaction? LC issuing bank, applicant bank, advising and negotiating bank, confirming bank. So let's see what the correct answer. Correct answer is C. That is advising and negotiating bank. So this information is already given here, that in favor of this with Bank of China as advising and negotiating bank. So all the answer, whenever you are saying the case study based question, all the information is provided. Your answers, your all answers will be available in the paragraph, whatever is given details. In that, your all answers will be available. Only you have to read it properly and comprehend whatever is given. So advising and negotiating bank. C is the correct answer. This part. C. Okay. And here already it is mentioned. Let's see next question. Under FOB, free on board Shanghai terms, who bears the responsibility and cost after goods pass the ship's rail? Chinese exporter, Indian importer, shipping company, both exporter and importer equally. Let's see the right answer. Correct answer is B. That is Indian importer. So just now we did one question previously. There also we just discussed what is FOB and CIF. In FOB, the risk is with the Indian importer. Importer will have more risk and the exporter, seller will have less risk. Okay. Let's see next. What happens if Sino equip present the required document correctly to the Bank of China? So this Sino equip is presenting the document to Bank of China. So what will happen? Indotech must make manual payment. LC gets cancelled automatically. Payment is made by SBI to Bank of China. Payment is withheld until physical inspection. So the correct answer is C. पेमेंट इज मेड बाय एसबीआई. सो जब भी फ्रेंड्स ये जो सीनो इक्विप है वो डॉक्यूमेंट्स प्रेजेंट करेगा अपने बैंक में, ओके, बैंक ऑफ चाइना, सो व्हाट विल हैपन, दिस कंपनी विल गिव द डॉक्यूमेंट्स टू its banker, that is Bank of China. Bank of China will send the documents to where? SBI. Then SBI will see the documents and make the payment to Bank of China. And after that, Bank of China will make the payment to its customer. So like this transaction will be done. Here one point, payment is withheld until physical inspection. So you always remember that bank is not dealing with the goods, whether goods are good or bad. Banks will deal only with the documents. Okay. We are only dealing with the documents. If documents are correct, the bank will make the payment. Okay. Let's see next question. If Indotech fails to pay, who bears the risk in LC based transaction? Assuming no discrepancy. So we assume that there is no discrepancy in the documents which are submitted by Sino Equip to the bank, okay, SBI. So now, if this company fails, who will make the payment? Exporter, advising bank, issuing bank, insurance company. Let's see the right answer. Correct answer is C, issuing bank. And who is the issuing bank? Issuing bank is SBI. So SBI has opened the LC on the behalf of its customer, that is Indotech. So if this customer is not able to pay, then what will happen? The SBI will devolve the LC. Whatever the backing will be there, whether the LC is made against fixed deposit, okay, against collateral, whatever is there. So based on that, the bank will devolve the LC, make the payment, and recover by whatever the backing is there. If fixed deposit is there, so bank will break the fixed deposit and collect its payment, or collateral is there, then they will go for selling the collateral. So in this way, the issuing bank has to make, because in LC, it is a reputation of a bank, not a reputation of a customer. Okay. Customer reputation is not on the stake. Bank reputation is on the stake. So whenever bank is opening LC, so bank will definitely ask margin. Okay. Sometime it is 100% margin. Sometime if it is sanction limit, so margin may be 20 to 25% margin will be there. But again, some collateral will be there, which will be supporting this transaction. So LC related questions are finished. So you remember, friends, that LC, letter of credit case study, is very important topic. So in this, you can get up to 10 marks if you understand the concept properly. So if you are having any doubt, you can write in the comment section. We will try to reply you and clear your doubt. So now next question is, which tool does not hedge forex risk? Okay, this already we have done. So B is the correct answer. We have already discussed. Let's see next. TT buying rate applies to purchase of forex notes from a tourist, demand draft for student fee abroad, payment for export bill previously purchased, FDI receipt by a company. Let's see the right answer. Correct answer is C. Okay, so payment for export bill, which was previously purchased, for that TT buying rate will be applied. And other than that, like demand draft, selling rate. Okay, purchase of forex note, selling rate. Okay, FDI receipt, selling rate. So everywhere selling, only here it will be buying. So now next is the rejection due to late presentation was justified because document was submitted after the LC expiry date. UCP 600 requires document within 21 days of shipment. The buyer refused to accept delay. The bank internal policy override UCP 600. And the correct answer is B. So 600 required document within 21 days. So the rejection due to late representation was justified. So some, I think, information is missing in this question, but you can remember that late presentation. Late presentation will be called if the documents are coming after 21 days of shipment. Okay, then only it will be called late presentation. Otherwise, it will not be taken as a late presentation. So we are at the end of the session. Thank you, friends. Thanks for watching. Don't forget to like and comment your queries and any doubt, any suggestion. And you can share this video with your friends who are preparing for this for exchange related exam, and subscribe to our channel if you have not subscribed. So thank you, friends. Thanks for watching. Have a nice day.